Hello everyone, this is Vakar from Akif CPA, your construction tax and accounting specialist. So today we're going to talk about different phases of a development company eh, and how you can use the custom tax strategy in each of these phases and save tons of money and be profitable. All right, so let's get to it. Development company phases. Why custom strategy is needed for each phase? So, first of all, each development phase can have tax consequences. Secondly, timing is everything. You can delay income and speed up deductions. And thirdly, planning for each phase can save you big in taxes, up to 40%. And the best part is you want to maximize cash flow throughout the entire project. All right, now let's go over the phases. So the phase 1 is the entity structure. The phase 2 is the accounting method. The phase 3 is the construction and development deductions. The last but not least, the phase 4 is the final phase, and that's the operations where the lease and sales comes in. So let's start with the phase 1. So the phase 1 is the structure of the company. And structure of the company is very important, picking the right structure. So for example, LLC is C Corp and an S Corp or partnership. So this is very important. So don't forget to deduct special expenses such as acquisition, interest expenses. And you want to spread out the cost. And remember to plan ahead. Don't delay. All right, let's move on to the phase 2. The phase 2 is also an important phase, and that's the accounting method. So you can either pick the completed contract method as a defer all income until completion, or the percentage of completion as recognized income as you do the work. So don't forget to maximize your deductions on your materials and labor. All right, so let's move on to the phase 3, and that's your it's all about phase 3 is all about deductions, construction and development deductions. So this is where you don't want to miss any deduction. You know, your IRS deductions such as bonus depreciation on equipment and property, and you also have three other options. So this might be applicable to you depending on the project or the type of company that you have. You can take the section 179 expense up to 2.5 million, and you also have an opportunity for zone investments for capital gain. And the last but not least, don't forget R&D credits for new and unique construction methods. All right, so let's move on to the phase 4. This is the final phase. Like I said, this is for the operations, for your sales and leasing. So this phase is critical. If you're planning on selling or leasing, you can either do the installment sales, spread out gain over payments periods, or the 1031 exchange, reinvest proceed and you don't have to pay tax. So don't combine all cost. Allocate land cost to each unit and have a sales formula so you can maximize capital gain treatment. Okay, so let's recap. So remember to plan ahead of time. Have a tax strategy before you even start a project. Use completed contract method for delaying income. And maximize depreciation and expense as much as you can. Don't forget the 1031 exchange and installment sales. And if you have any questions, you can give us a call and we can talk in detail, or email us at info@akifcpa.com or call us at 713-451-9700. Let's sit down and discuss and schedule a call. We'll be more than happy to help you, All right. Thank you so much.